Major financial institutions are quietly preparing for something that could create a new class of wealth. And at the center of this shift is XRP. What's unfolding right now on the XRP ledger has never happened before in cryptocurrency history. You're going to want to hear this. Ripple's CEO, Brad Garlinghouse, just said something that's turning heads across the financial world. He predicted there will be trillion-dollar crypto companies, not million, not billion, trillion. And when you look at what Ripple is building, it's not hard to see why they're positioning themselves to be the first to reach that valuation. The infrastructure they've put in place, the partnerships they've secured, and the technology they've developed all point in one direction. When XRP finally breaks through its key resistance levels, the speed at which Ripple's valuation changes will shock people. Critics have long said that certain price targets would be impossible because they'd create trillionaires overnight. But here's what they're missing. Ripple isn't just another tech company. They're building something that could rival Amazon in scale and surpass Apple and Microsoft in impact. They're positioning themselves to become a central pillar of the next generation financial system. And if you've been paying attention to what's really happening, you know this isn't hype, it's infrastructure. Now, before we go further, if you're finding value in this breakdown, go ahead and subscribe. We're tracking these developments daily, and you'll want to stay updated as this story unfolds. Hit that button so you don't miss what's coming next. Here's where it gets interesting. The XRP ledger just recorded 773 million XRP moving between accounts in a single day. That's not a small number. To put it in perspective, that's hundreds of millions of dollars in value transferring across the network. Now, the question everyone's asking is whether this is speculation or actual utility. The truth is we can't say for certain yet. But what we can say is this: the momentum is building and it's not slowing down. In fact, the activity is accelerating day after day. Something is happening on that ledger, and the data suggests it's bigger than just traders moving tokens around. The pattern doesn't match typical speculative behavior. It matches something else entirely, and that's what has people's attention right now. While this ledger activity explodes, one country is making a move that others are completely missing. South Korea just traded $401 billion worth of XRP on Upbit in just 7 days. Let that sink in. $4 billion. And here's the kicker. This happened during a price dip. While most retail investors were panicking and selling, South Korean traders were buying aggressively. They were buying the fear. This is a pattern you see with sophisticated money. When there's blood in the streets, that's when the smart money accumulates. South Korea has always had a strong appetite for this asset. But this level of activity during a downturn tells you something about their confidence. They see something coming. And if you found this insight valuable, hit that like button. It helps more people see this information when it matters most. But here's a risk that's brewing, and it could catch a lot of people off guard. Coinbase recently experienced a major trading disruption. Users couldn't buy, sell, or transfer assets for hours. The company put out a statement saying funds were safe and they were investigating the issue. But this highlights a fundamental problem. If you're holding your crypto on an exchange, you don't actually control it. Not your keys, not your crypto. That's not just a saying, it's a reality. As regulations tighten, we're going to see massive bottlenecks with exchanges. Platforms that aren't fully compliant with KYC and anti-money laundering requirements are going to fold overnight. It won't be a gradual decline, it'll be sudden. And if your assets are on one of those platforms, when it happens, you could lose everything. Now, Coinbase will likely survive because they're doing things the right way. But do you really want to deal with downtime and disruptions again and again? The smarter move is to custody your own assets, use a hardware wallet, take control, because when the regulatory hammer comes down, only the compliant platforms will remain standing. And even then, you're trusting someone else with your wealth. Quick question for you. Do you hold your crypto on exchanges or do you keep it in a private wallet? Drop your answer in the comments. I'm curious to see where everyone stands on this. Now let's talk about the bigger picture, because what's happening with exchanges is just a symptom of a much larger shift. DeFi, decentralized finance, has been stuck at around $150 billion in total value for 2 years. It hasn't grown. Some of the apparent growth has just been from cryptocurrency prices going up, not from actual market expansion, and there's a reason for that. Current DeFi is built on crypto speculation, gambling, and over-collateralized loans backed by crypto. Those are fine for niche markets. They've gotten us to 150 billion, but they won't get us to the multi-T-trillion scale. We need to actually compete with traditional finance. To break through that ceiling, DeFi needs to do what ordinary people need: real-world assets, tokenized treasuries, stocks, bonds, money market funds, and most importantly, it needs to connect with the traditional financial system. Because until everyone is on blockchain, which won't happen anytime soon, we need to be able to move money in and out seamlessly. That's the bottleneck. And here's the thing, most blockchains can't solve this problem at scale, but the XRP ledger can, and the mechanism they're using is lending. Traditional lending is the core business of banking. It's a $1 trillion market. Banks make money by lending. Investors participate in lending because it's a rational, stable return. But traditional lending has problems. If you lend money for 10 years and you need liquidity tomorrow, you're stuck. You have to sell the loan, which is complicated and messy. It's also hard to assess how a portfolio of loans is performing in real time. So here's what Amendments 65 and 66 on the XRP ledger do. They enable traditional style loans where creditworthiness assessments happen off-chain. Someone still evaluates whether a borrower deserves a loan. Legal actions still happen off-chain if there's a default or bankruptcy, but the loan portfolios themselves are tokenized. That means if you contribute to a lending pool, you get a token representing your share of that portfolio. And here's where it gets powerful. You can see the value of that portfolio on the decentralized exchange in real time. If you need money tomorrow, you can sell your portfolio token instantly. If you want to invest in a loan portfolio that's performing well, you can see the performance and buy in. If loans start going bad, the token price drops and you know immediately. This is transparency and liquidity that traditional lending doesn't have. And if you're still with me at this point, make sure you're subscribed. We're going deep into how this technology is reshaping finance, and you'll want to follow along as these systems go live. Now, here's where XRP has an advantage that Ethereum and other platforms don't. The XRP ledger doesn't use smart contracts for this functionality. And I know that sounds like a disadvantage at first. Most people think smart contracts are the future, but hear me out. On platforms like Ethereum, every DeFi feature is built with smart contracts, and those contracts are usually owned and controlled by a small group. There are multiple competing contracts for the same function, like decentralized exchanges. Each one has its own rules, its own risks, and its own potential for bugs or exploits. We've seen this play out over and over with hacks and rug EPs. But on the XRP ledger, these lending features are core to the protocol itself. They're not controlled by any one group. There are no competing implementations. Everyone uses the same unified system. And it's built to be best in class from the start that eliminates smart contract risk entirely. No bugs, no exploits, no centralized control by a small team. It's a fundamentally different approach. And when you're talking about trillion-dollar lending markets, security and reliability matter more than flexibility. This is why the XRP ledger is positioned to capture the massive traditional finance markets that DeFi hasn't been able to touch yet. We're not talking about the $150 billion speculation market anymore. We're talking about multi-trillion-dollar loan markets. That's the scale we're moving toward. But there's a threat on the horizon that could destroy most cryptocurrencies, and it's not regulation, it's technology, specifically quantum computing. Bitcoin is increasingly being seen as a technological dead end, not because it's not valuable, but because the underlying technology isn't advancing. Scalability is a massive issue. Bitcoin can't scale to handle global transaction volume, and more importantly, it's vulnerable to quantum computing. Google has already warned the US government that quantum computers capable of breaking current encryption are likely only 2 to 3 years away, not 5 or 10 years, like Bitcoin maximalists keep saying 2 to 3 years. When that happens, Bitcoin will need a hard fork to become quantum proof. And that's assuming the Bitcoin community can even agree on how to implement it, which is far from guaranteed given their history of governance disputes. The risk is real. Public and private key systems, which are the foundation of Bitcoin security, will be vulnerable once quantum computing reaches operational capability. But the XRP ledger is already prepared. It's designed to be quantum resistant. The DNA protocol delivers proof-based identity through off-ledger zero-knowledge proofs anchored on the XRP ledger. This replaces key-based security with cryptographic proof. And here's the important part. Existing XRP accounts can be resecured without needing new addresses. Bitcoin users will have to move their funds to new quantum-safe addresses. Assuming a successful fork even happens, XRP holders won't have to do anything. The ledger adapts. This isn't just theory. It's built into the architecture. And this brings us to something that was hidden for years. In 2016, a former City of London banker named Lord Belgrave reviewed NDA drafts and briefing materials that identified public and private key systems as vulnerable to quantum computing. These weren't public documents. They were internal briefings outlining timelines, attack surfaces, and systemic risks. The conclusion was clear. Blockchains that rely solely on static secret keys would face critical threats once quantum computing became operational. But here's what's fascinating. The XRP ledger was treated differently in those documents. It was described as an adaptable system capable of evolving beyond traditional key-based authority. The papers explored moving toward identity-based proofs, where human-like credentials and verifiable identity form the ledger's control layer. And that's exactly what we're seeing now with the DNA protocol. This was planned almost a decade ago. Other networks like Algorand and Hedera are also quantum safe. Most ISO 2022 networks are preparing for this. But the fact that this was being discussed in private financial briefings in 2016 tells you something. The people who control the legacy financial system have known this was coming for a long time, and they've been positioning accordingly. Everything is converging faster than anyone predicted. AI is advancing at an exponential rate. Blockchain technology is maturing, and now they're coming together. The next financial system won't just be digital, it'll be fully automated. Artificial intelligence managing smart contracts, blockchain providing transparency and security, quantum-resistant encryption protecting it all. And this is going to happen within the next 2 to 3 years. Some people say 2030 is the deadline, but the pace of technological advancement suggests it could happen sooner. We're watching AI and blockchain integrate in real time. We're seeing quantum computing timelines compress. The infrastructure is being built right now. So here's my question for you, and I really want to hear your thoughts on this. What's your game plan for positioning yourself before institutional adoption kicks into full gear? Are you accumulating now, or are you waiting for more confirmation? Drop your answer in the comments, because I think this conversation is one of the most important we can have right now. And here's what this all means for anyone holding XRP. Financial freedom is on the table. Not for everyone, but for those who have a clear strategy and execute it properly. This isn't about getting rich quick. It's about understanding what's being built and positioning yourself accordingly. Generational wealth is possible here, but only if you're patient, only if you're strategic, and only if you understand the sequence of events that needs to happen. First, we need clear regulations. That's the foundation. Without regulatory clarity, institutional players can't fully enter the market. Once regulations are in place, institutional adoption accelerates. That's when the real money flows in. And once institutions are fully committed, that's when retail investors can start earning sustainable returns on their crypto through lending, staking, and other mechanisms. But we're not there yet. Right now, the risk is still too high for most people to put their crypto to work. Once institutions remove that risk, everything changes. So stay patient, stay informed, and make sure you're subscribed so you catch every update as this story continues to develop. The pieces are moving into place faster than most people realize. And when it all clicks together, you're going to want to be ready.